Is it possible to pay gross salary, without deductions of pay-as-you-earn tax and national insurance to a non-executive director? No. Directors are not termed as employed but office holders, thus placing them out of the scope of national minimum wage. But their earnings are treated as that of an employed person, that is well under the scope of national minimum wage and thus will be paid net of tax and national insurance. Before we move further, if you like the content we share, subscribe to our YouTube channel. Are the tax and national insurance implications subjected to any variables? Yes. The status of these implications depends on the role of the director, from which the pay is generating. Is it possible for non-executive directors to receive gross salary through an intermediary? Non-executive directors think that receiving salary through a limited company, under their complete ownership, is possible without any deductions for tax and national insurance. But this is not a possibility as per IR 35. What does IR 35 state? IR 35 is a tax legislation which is in place to prevent any sort of tax avoidance. According to this law, an office holder should be deemed as employed for tax and national insurance purposes. Why appointing a limited company doesn't absolve the non-executive directors of tax and national insurance obligation. According to IR 35, even if it is the limited company being appointed, the work is still being done by the non-executive director who runs it. So, the tax and national insurance deductions stand. Are there any payments exempted from pay-as-you-earn tax and national insurance? If non-executive directors, in addition to their duties as directors, contribute as a freelance, self-employed professional, the salary can be paid without any deductions. What are the prerequisites to achieve this? In order to save the pay from any deductions, separate contracts should be drawn for both directorship and duties as a freelance professional. The duties performed as a freelance professional should be different from the duties performed as a director. The intent should not be to avoid tax but to claim exemption where allowed. HMRC can question segregation if not justified properly and has the authority to scrap it at will. What should be the way around? In order to claim the relief where available, the services of an accountant should be sourced to carefully get through the complex jargons. This can help insulate the arrangement from a tax point of view. At Clear House Accountants, a team of expert accountants, driven by innovation, will provide you with tax-efficient solutions and help you minimize your tax charge. If tax sounds like a problem, give us a call today. Sit back and relax while we do all the complicated work for you. For more informative videos, subscribe to our YouTube channel and click the bell icon to get notified.